Okay, I'm going to do an example for problem 6. And the first thing we have is Bob has some transactions relating to notes receivable. So, on November 1st, loan $10,000 cash to Jack Hall on a 1-year 5% note. So we're going to go ahead, debit notes receivable for $10,000. We go ahead and credit cash for $10,000. On December 11th, we sell goods, Bob sells goods to Abe Incorporated, receiving a $5,000 60-day 4% note. So we'll go ahead and again debit notes receivable, and in this case it's $5,000. Credit sales. Okay, 12/16. Received a $2,000 4-month 5% note in exchange for A company's outstanding accounts receivable. So we have a notes receivable. This time it's $2,000. And we have accounts receivable for A company. For $2,000. So, as of December 16th, we have 3 different notes receivable that we have to account for. So, on December 31st, we're going to accrue interest revenue on all the notes receivable. So, let's look at our various notes receivable. We have Jake, that we owe, that's our November 1st receivable. And that is for $10,000. It's a 5% note, and it is a 1-year note. Now, we have, this transaction occurred November 1st, so we have 2 months of interest, right? November and December, that we have to take into consideration. So we're going to multiply that by 2/12, and that will give us $83. There's some change, but we're going to record it as 83. December 11th, the goods we sold to Abe, that note is a 4% note. So it is $5,000 times 4%. Now this is a note in days, right? So it is a $5,000 60-day note. So let's look at how many days have transpired so far. First of all, when we're calculating the days, we do not include the date issued, but we do include the day of payment. So let's go ahead and figure out our days. 31 days in December minus 11 for the note is going to equal 20. So we're going to multiply that by 20 divided by 360. That's the number of days the text tells us to use. That's going to be approximately $11. Again, that's not exact, it's an approximate figure. And then we have our third note, $2,000, 5% interest. Now that is not even for a whole month, right? So this note, although it's a monthly note, it's only for half a month, right? It wasn't issued to December 16th. So we're going to have to multiply that by 0.5 over 12. And that is going to give us approximate, again, there's some change, but approximately $4. So if we add these notes together, 83, 11, the interest together, 83, 11, and 4, that's going to give us a total of $98. So on December 31st, we're going to go ahead and debit interest receivable for the 98 and credit interest revenue for the 98. So those are our transactions through the end of the year. Now we want to record the collection of Hall's note when it matures in 2013. So that's going to mature in November, right? on November 1st. It's going to mature. So first of all, let's figure out the cash we're going to receive. I'm going to go ahead and actually do the, maybe I'll do it down here. Let's go ahead, this is November 1st of the following year. Let's go ahead and record our cash. We are going to get the note plus interest, right? So the note we know is $10,000. Let's look at how much the interest is going to be. It's going to be 5% over a year. So 10,000 times 5% is going to give us $500. So we're going to collect cash for the 10,000 note plus 500 interest. So our cash is going to be 10,500. We want to take the note off our books, so we're going to go ahead and credit note receivable for the 10,000. Next, we have to determine what our interest revenue is. Well, we already accounted for some of the interest revenue, right? For Hall, back in at the end of last year, we accounted for $83. So let's look at our total revenue, what that is, $500 minus the 83 we already accounted for. So 500 minus the 83 we accounted for will give us, I believe, 417. Yes, 417. So we're going to go ahead and credit interest revenue for the 417. Again, because we already credited interest revenue last year for the 83. Last thing we have to do is take the interest receivable off the books. The interest receivable, of course, it looks like it's 98, but that wasn't all from Hall. 83 of it is from Hall. So we need to go ahead and credit $83 for interest receivable to get that off our books. So that should do it for number 6. If you have any questions or problems, give me a call.